Here's the Elliott wave forecast for February 16th, 2011 on the S&P 10-day chart. Looks like the futures are up about 9 in the Nasdaq, and the S&P is up about 6 at this point in time, which is really late. Anyway, if we take out 1333 tomorrow, which is likely because the futures are up approximately 5 or 6, uh, there's a chance we can sustain a move to as high as my target, which I've been reiterating over and over again, 1340 to 1350 to the upside. That'd be a full upward 3. And 1360 approximately would be 0.618 times wave 1 plus wave 3 and wave 5. So I think the biggest milestone isn't the round numbers like 1350. It's the 0.618 times wave 1 plus wave 3 targets, which is S&P 1360, and if we can break right through that and close above 1360 in the coming weeks, that could mean we're in a pure third wave, and a pure third wave could mean the S&P could reach as high as 1700. I remember back in 2003. Here's a story. This is important because I need to mention this. 2003. I remember watching stocks that were completely dead and worthless that no one wanted. I remember watching a stock called Rambus, and I'm pretty sure you guys know what Rambus is. But I remember it was February of 2003. I think it was around February of 2003. It was it was probably $4 or $5, $4 or $5 stock, and I know the news. It was driven by news, but the stock went from 5 to about 25 in a period of about 2 weeks, and I made a high percentage gain. I'm talking about 200% trading that stock, and you don't get periods like that very often. But anyway, basically in the third wave, you have every boat rising. I'm talking every boat, and you can argue that Cisco is a boat that's sinking, but you have to look at the competitors, which were dead. I'm talking the JDS Uniphase, the Junipers, the Siennas, the Alcatels. I'm talking the bad stuff that no one wanted, and people are buying the heck out of them. I mean, they may have corrected yesterday, but the fact that moved in huge percentage gains is really important because that's a sign that all the boats are rising. And you have all the boats rising at once, that's the third wave. And I remember seeing this. I remember some of my subscribers have been around for a long time, since like 2002, 2003. Remember that period where I started talking about it's like, why are people buying this crap? It's like it's like all the boats are rising. And once I started seeing that, just all the signs of like these bad stocks rising like this, like in huge percentage gains, it's a it means that we're in the start of a third wave. Not the end of a third wave, but just the middle of one or the beginning of one. Third waves have all the boats rising, like I said, and just be careful if you're short. Because I remember in 2003, like another Elliottician. This is another story. He insisted that they were going to crash every day during 2003, and he got into some big trouble. I'm talking. I don't want to get into it, but poor guy is like not in good shape right now. But he was on these message boards saying, "Oh, we're gonna crash like Dan Eric every day," and he was short a third wave. And not only did he wipe out his gains, wipe out his whatever money he had, it became negative. His balance was negative, deep negative, and he got into deep crap. So I mean, I think it's important to mention this. And this video might be a little long, but I think I have to mention the fact that I'm seeing the boats, and Dell was one of the boats. Dell it was had blowout earnings last night or last evening, and that is the deadest boat of them all. That's like the lowest. I'm talking like the bottom of the food chain. Dell is the bottom of the food chain, and for the first time in seemed like years, it rose dramatically, and blew out earnings. But when you see all the dead like stocks rising, like the opticals and the Dells, it's a sign. Anyway, anyway, I need to mention that because it's kind of important. Because it's you really give a sign of a third wave, that's a sign. And if you think it's the fifth wave, it ain't a fifth wave, guys. All right. So tell your buddy Dan Eric and Proctor that um, telling people to short these third waves is very dangerous and could lead to some big trouble. Anyway, yeah, it's just I remember this in 2003. I remember it clearly, like it was yesterday. Anyway, for Nasdaq, let me move on to the forecast. I should have made a separate video because I just need to talk about it because it's just important. Anyway, Nasdaq gap up. Futures are gapping up about 9 in the Nasdaq, so it could probably take out 28.15 approximately to the upside. And the highest target I'd have would be around 28.40 to 28.50. And again, if it takes that 28.50 Nasdaq and closes above that, that's huge. Not only is it the top of the 2007 high was 28.61. If it takes that out, I mean NDX has already done it, so I mean it's not like it's a big deal because we had a major index, NDX already break out above the 2007 high. It's well above it right now. So 2007 high for Nasdaq is 28.61. That's an important level to breach. For the Dow, futures are up about 50, I believe, and it should take out 12,285. And my target is our 12,400, and the 0.618 times wave 1 plus wave 3 target is 12,600. So I'm cheering for 12,600 to get broken, not 12,400, because 12,600 gets taken out, it could potentially reach 17,000 in the next couple of years. And yeah, let me reiterate these targets again. S&P, the big target is 1360, and breaches 1360, we can rally to as high as 1700. For Nasdaq, the important level is 2861. We can take that out. We can get to as high as 4000. And for the Dow, 12,600 is the big upside target. If we break that, we can get to 17,000. That's a wrap.